Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday, the 4th of October 2019. And while we await the non-farm payroll figures due out in a few hours from now, we thought we would briefly touch on recent advocates of the case for gold. Advocates who perhaps historically have tended to shy away from this investment class. So let's investigate. For those of you who religiously follow the Bloomberg channel, it would not be surprising to hear the names of three people we are about to mention, as they do appear regularly or at worst from time to time. What is interesting though, more interesting in fact, is that despite their respective positions, which are either involved in client portfolios, company advisory strategies or foreign exchange, is that all three are of the opinion that now is the time to buy gold. At this moment, gold is standing at $1,509 an ounce, while we await the very important non-farm payroll report due later today. Now, that said, at or around this $1,500 level, Rona O'Connell, head of market analysis at International FC Stone, believes that while she is not convinced that gold is moving to $2,000 anytime soon, she does make the case that due to current trade wars, geopolitical tensions in the Middle East, and negative rates abroad, that it makes sense for investment advisors to place some of their or their clients' funds into gold. She also adds that whilst China and India between them are responsible for around 60% of the gold jewellery buying market, recently, purchases have tended to be disappointing, but there are signs that it is now beginning to pick up. John Hardy, head of foreign exchange strategy at Saxo Bank, is in a similar camp. He warns, of course, what one has to do is to compare the price of gold versus real interest rates. That's interest rates earned less inflation, which then represents the cost of holding gold. So if that interest rate is positive and is high, then obviously the cost of holding gold is higher than if that interest rate, net rate, is low or negative. But he also admits that gold has many tailwinds behind it to push it forward. John Gagliardi of Fidelity Investments argues the technical analysis point that gold broke above the trend line in June. And whilst it may fall back a little from that peak, the trend is most definitely up. He also argues that recent moves in the price has confirmed the view that there is now a new upward trend. Now, the reason we mention these individuals is because they're not your traditional gold and silver analysts or pumpers owning or working for a bullion bank. These are people whose institutions mainly deal in a range of asset classes, but predominantly equities and currencies. So, from our perspective, and hopefully from yours, it's interesting to find experts in the field who have tended historically to recommend other asset products to now direct their attention to gold. Now, we shall find out later today gold's reaction to the non-farm payroll data, and also at the end of the month on decisions made by the Fed on interest rates. What all of them suggest, the three people in particular, is that at this current level of around $1,500, gold has a relatively secure floor and a relatively secure ceiling. But when the price does break out, which it will, and possibly relatively soon, not necessarily tomorrow, but relatively soon, it's more likely to be to the upside as opposed to the downside. We shall be producing a video this evening, British summer time, so it'll be afternoon Eastern time, on the non-farm payroll report. But meanwhile, please do share your thoughts on this video in terms of where you believe gold is heading over the next few months. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.